By the way, I think Jacksonville is in a better position with its fundamentals, its economic fundamentals, than Tampa was 10 years ago.
Interesting.
I could probably talk about a whole bunch of them, but you mentioned job growth,
Yeah.
right? The retail sale, I mean, these are in no particular order. Retail sales growth over the last 4 years, number one, Jacksonville, Florida.
Interesting. In
Number,
Florida or in the U.S.?
no, in the US.
Wow.
Yeah. Number
Okay.
two, I think, is Austin. Number three, Nashville.
Interesting. I mean, that
Yeah.
bodes well for the whole like rising median wage argument.
Absolutely.
Yeah.
No, that's right. And another very interesting thing, average incomes
Yeah.
or median
Yeah.
incomes are about the same in Jacksonville in the metro area as they are in Orlando and Tampa. However, our rents are a lot less.
Yeah.
So if you look at rent to income ratios,
Yep.
we are one of the cheapest in the nation.
More spending money.
More spending money,
Yeah.
more ability to appeal as a real estate developer. One of the hardest things in Tampa is in order to pay for land and to build something there, you have to charge a lot of rent
Yeah.
to do that today. And we are able to deliver some of our buildings for rents that are going to be much more affordable than if you were in Tampa or in Orlando.
Yeah.
And therefore, I think what you're going to start seeing, by the way, this is already being proven out in the numbers. A lot of people from South Florida are moving north.
Yeah.
So
I was tip of the spear there.
yeah. Well, and I was looking at Redfin does data once in a while
Yeah.
on migration patterns. I don't know exactly how I forget what their methodology is, but number one in migration market, according to Redfin, as of the first and second quarters was Miami into Jacksonville, which that's a big change from the post-COVID dynamic of, people from they're still moving from the north too.
For sure.
But Miami's just overtaken it.
That's super, super interesting. So I'm gonna get better Cuban coffee finally.
Yeah, I hope so.
I'm excited for that. Yeah, man. I'm not surprised, right? Like I will tell people from Miami to move here until I'm blue in the face, right? Because it's worked out so well for me. Those are really cool stats. So growing retail spend, what was it? It was
Yeah,
retail spend.
percent increase in retail expenditures from 2000 to 2004. And so that points to a lot of things, right? I love that number because it shows there's job growth. It shows that there's wage growth, that they're good jobs. The fact, again, I'm not going to get the exact number for you, but a lot of the retailers that are food and beverage heavy in Brooklyn, for instance, are making between $5 and $10 million a year. I mean, it's pretty crazy the numbers that some of these restaurants are in the Brooklyn and down into Riverside and San Marco areas. So to me, it shows a couple things. One is that the fundamentals are already very strong here, but two, there is a significant pent up demand for shoppers, customers, people that want to go downtown for some entertainment, for some really great restaurants. And we're betting that a lot of those people, both in and out of market today, are going to want to live downtown too.
Yeah.
Because of that.
Yeah, that's really interesting, man. We talk about pent up demand right now on the show often in the sense of interest rates have been really high for really, really long, and therefore people just it's been slowing in sales, but the demand is still there, right, in the real estate market. And when I think of the stats that you're sharing, right, this idea that like people have spending money, we have the same wages but much lower cost of living than these other cities that are much more expensive. What I think of an investor is, okay, home price appreciation has a long way to go here.
No
Right,
question.
like the real estate market will appreciate here. Rents will continue to go up for the people that are living in our houses, and they're going to be able to afford it because the economics are there. We were talking a little bit before the show about, I was asking you kind of like what's changing on the ground, and you were like institutional money starting to roll through here. Tell me a little bit about the profile of the investor that is looking at in downtown right now versus when you first kind of got started here.
So yeah, that it's a great point. I lean into my experiences in DC the first time around. So when I was doing urban, large scale, but still sort of urban infill in DC, grocery anchored types of deals like we're doing here, and in Tampa, where institutional investors, they don't love necessarily being the first mover. And what I've seen in other markets is I was joking earlier, it's like a drip out of a faucet to start. And then by the time you're done, it's a waterfall. And I would say that when we first when I first started 3 years ago, it was more like a drip coming out of a faucet where there were a couple of what I would call institutional investors or developers that were interested, and some of them had made investments in Jacksonville. And I can't tell you how many meetings I take a week now with institutional investors. I mean, it is, and they're not just interested in our stuff. They're very interested in our stuff, but they want to do things on their own. They want to make other investments in downtown and other parts of Jacksonville for that matter, because they believe, because they've seen it in other markets, that as the tides rise in downtown, it's going to lift the boats of other neighborhoods in Jacksonville too.